Here we go. All right, everybody. Stocks by the numbers. Welcome back. And as per request, wanted to take a look at RCAT Holdings, ticker symbol RCAT, listed here on the NASDAQ. This is an up-and-coming stock that just started to trickle in a couple of million. We can see volume started to pick up here going into 2025, throughout 25. They recently got an Army contract. We're talking about a small cap company right now, right? Sub 1 billion, 681 million market cap. Stock's moving about 9.5 million shares a day. You can see today about half that volume, about 78.5 million shares in the float. The beta, 1.4. Again, the beta is the volatility of a stock in relation to the overall volatility of the market. We could also see that losses have been widening over the last couple of quarters, and I'm sure it's to ramp up production for the Army contract they were talking about. Right, but we can see, about 6 million, 6.3, down to 1.5, 1.6, right? Losses widening over the last couple of reports. Loss of 27 cents. Analysts expecting a loss of about 10.5 cents. This was about 2 months ago. But since then, the stock has kind of been holding its own on the up and up, right? Because chances are, if this is a drone surveillance type of company, software, tech, and we're starting to get, an Army contract, now potentially more government contracts maybe trickling in. So I could appreciate the fact that, some younger people are buying in. And again, it's cheap, right? $6-7 a share. A lot of people want quantity over quality. Not saying that there's no quality here, but you understand my point. But, you may be onto something here. In my opinion, the fundamentals still look kind of weak, right? Which is why, if we're talking about now a trader's situation in the moment, we may have to look at technicals more than fundamentals. But let's check the fundamentals. Let's see what's going on here. Yeah, loss has been missing. Revenue, 2 beats, 2 misses. Okay, so debt has been climbing. But again, a company like this, usually we take on debt, we issue more shares to raise capital so that we can ramp up production, right? So we kind of understand that. Debt just went from, basically doubled, went from almost 14 mil up to about 28 million. Free cash flow drops to minus 16 mil for Q1, sitting with about 7.7 million cash on hand. We can see the short-term assets and liabilities almost neck and neck. Long-term, though, good outpacing of the assets over liabilities. This is interesting. So it costs 2.5 million as of last quarter for 1.6 million of revenue. But we were outpacing that much better, minus this quarter, really. Okay, that might be just a short-term hiccup right now. Gross profit negative. And we can see also, they were talking about this. We'll get to the news articles in a second, but you can see the bump up in operating expenses jumped up about 50% and then about another 25-30%. So we went from about minus 5-6 million a quarter for operating expenses. Now you can see 2 quarters ago, minus 9 million, now minus 11.6 million. But again, we know we have to spend money to make money. Obviously, that brings the operating income further negative. Looking, EPS, right? Losses widening. Shares outstanding have been consistently increasing. I know they did a couple of offerings, but yeah, the shares outstanding, as you see, went from the mid 50 million range. Now we're up to about 85.5 million. So we increased our share amount by, what's that? About 60%. But again, it may all turn out well over the long term. I'm not liking the consistent decrease in equity here, as you see, dropping from about 69 million roughly 2 years ago. Now we're down into the high 20 million range. But last quarter, 27 million. 2 quarters ago, 27 million. Last quarter, 28.9 million. So that moved in the right direction. Book value continuing to get eaten up here. down about 75% over the last 2 years, going from $1.28 down to 34 cents a share right now is book value. So we're trading about 20 times book value right now. And my biggest concern, again, I'll show you the support trend line. My biggest concern is right now the company's bringing in a couple of mil, and even with the Army contract, you know, short sellers may just hit the stock, especially if markets drop down on this big, beautiful bill. If people are concerned, again, about the tax implications and all this stuff, there was talk about, you know, changes to insurance. You may be seeing, I think it was Centene, I believe, CNC, is dropping hard after hours. They pulled their what do you call it? EPS guidance, I believe. And other stocks like Oscar Health that we spoke about, OSCR, that began dropping after hours as well. So we're starting to see some reactions here from this big, beautiful bill. RCAT, obviously, sitting here at $7. But you understand my point, right? If, as I always say, if Wall Street, if the big boys on Wall Street, if they see a situation like this and they kind of quote unquote know that it could be hit, it could be shorted, you know, they can take advantage here at 7, they could buy it back at 3. Trust me when I tell you, they more than likely will take that shot. The only thing that might cause them to hesitate is how much it's trending now online. Yeah, we don't really have much. Yeah, see, 21.5 times book. Enterprise value jumped up to 700 million. I disagree, but that's just me. Okay, we can see, yeah, margins down big. So right now we're in the situation where we just need a bunch more revenue to come in, which supposedly they're forecasting. As you see here, looking for Q2 now, 7.7 mil. And you can see going into Q3, almost 30 million. And to close out the year, almost 41 million. So this seems like the bulk of that Army contract, right, coming actually onto the balance sheet inside of the next couple of quarters. So this next quarter here, that's why I'm saying in the short term, they could potentially break it and they could drop it hard. Over the long term, though, it seems like if they're able to fill this contract, right, with no delays, no issues, no hiccups, then in theory, they should get another 1 or 2 contracts into 26 and so on and so forth, right? So a situation like this, in my opinion, it's about pricing and timing. And if you're already in this, like back here at like 4 and you're up nice and, you know, you really like it for the long term, then probably not going to deter how you feel about it. All I'm saying is if it does happen to break, you shouldn't be surprised. And also at the same time, if you do happen to go red on a big break, if you do have cash on hand and you do believe in the stock long term, then you can always average down and add to the position if you'd like, right? But this support trend line here, I want to show you, this is going from the lows. Again, we've been on the up and up really throughout 24 and 25. But this is the lows here. And you can see I have multiple support levels drawn out. But you can see this is the low here of first week of June 2024. And that's coming all the way up. And you can see it's basically touching all of these recent dips here over the last couple of months. Right? So this right here, even though it's going back a year ago, basically, this right here is your shorter term support trend line, right? We've been on the up and up. We've recently touched it a couple of times, bounced off of it. Now it looks like we're dropping back down. We've been rejecting off the 20-day, right? We're probably going to come back down here about 660 and change tomorrow, in my opinion. That's where the stock should go. And then you're going to want to see if it holds that line, right? Because again, the fundamentals right now, I mean, even if we look at what they're looking to report, right? The equity was dropping. It's down to about 28 mil, 29 mil, whatever it was. Even if I think they were saying like, they were looking for about 70, 80 mil for the year. So, again, we're trading 20 plus times book value, equity dropping, shares increasing, and even if we bring in that 80 mil, we know currently they're operating at a loss. But even if we, again, push that to the side, you bring in 80 mil, your equity is like 20-something million, right? So that puts, in my opinion, fair value of the business at like 110 million. And you know, you're trading like 6 times that right now. So that's why, again, the way Wall Street looks at it, is something like this, they can easily bring that ratio down to 5-4. You understand? So, again, not wishing ill upon your stock, but keep an eye on this support trend line. If it breaks, you could potentially come back down here. Look, you can see the tightening here around the mid-range, looking like about 290, even if we call it $3 psychological level, right? You can see if it breaks, it can get down there really inside of the next month or so if it wants to. So keep an eye on that trend line. And again, this fib here, bottom fib, 1 year chart, by the way, I'm looking at 664. 664 would be what I would personally be watching. Because again, if it continues to bounce, right, and it gets back above the moving average, even if you might be a little late, let's say you missed $1, right, and it gets back above 8, yes, you didn't get it at the lowest price you could have, but also at the same time, you do want to kind of wait for that confirmation, right, so that you don't just jump into something prematurely. And if it does have that bounce, and it doesn't break, as I'm expecting, then, again, even though you missed $1, that might confirm 8 to 10, right? So, again, did you miss, $1 entry? Yeah, but at the same time, you may have confirmed a 25% move, right? So that's why sometimes you have to wait for confirmation. I know sometimes it sucks, but it is what it is. But also, this next level that it could come down to here, we were looking at the high 2s, potentially 3. You can see that is going from the low here before it started climbing, really, the big drop, and then it started stepping up, right? So this is December 7th, 2023. And that basically goes through, I know that looked like a flash crash, but I went through right to that next low that we started with for this shorter term support on June 7th. December 7, 23 to June 7, 24. Nope, incorrect. That's that line. I just confused myself. But yeah, obviously I went from each low and just scaled up. But so this is from February 27th, 24, excuse me, to June 7, 24. Bang, that orange line right there coming up. So that could be a potential support level. Also, at the same time, you can see a slight gap up here. What was this high? 422. And then it flattened, and then we gapped up. So we could always fill that gap as well down to 422. So even if it doesn't completely break down, we may go down to about 420, shout out, and then have a little bounce right there. Real quick, short float, 14.5%, we'll call it, according to FinViz on RCAT. But let's check recent news. Oh, they're getting sued. Okay. Okay, we're getting sued. We're getting sued. We're getting sued. My goodness. Oh, okay, so let's go to earnings. How about that? Shares down, pre-market, wider than expected loss, lower revenue. Let's see what they actually reported. Manufacturer-driven technology. Undergoes a strategic shift in its product focus and manufacturing processes. Again, they may be making this shift simply to fulfill and accommodate the Army contract. But obviously, we have to hope that if these changes are somewhat permanent, you have to hope that they can continue down that path, right? Because now if you have to revert or make even another operational change for the next contract, now we're dealing with an issue, right? Now we're dealing with a situation where we may be burning 10, 30, 50 million every couple of quarters to do a transition, right? Which, again, I mean, if the revenue and the orders really start coming in bulk, it might just be a drop in the bucket. But here, kind of in this state of infancy, it's viewed as an issue. Company reported revenue 1.6 million, decrease of 4.98 million or 75%, same time last year. Decline is primarily due to lower product revenue as the company shifts its manufacturing focus. Losses are big, attributed to lower than planned manufacturing levels and higher relative overhead costs. Operating loss stood at about 12.5 million, we'll call it, reflecting increased operating expenses due to higher headcount and increased sales and marketing efforts. Higher headcount. Huh. Net loss 23 million, increase of 17.7 million or 328% from the prior year. Significant increase was primarily due to a substantial loss recognized on the February 25 note to Lind. Loss per share, right? Product related revenue decrease. Yeah, okay. Shift in manufacturing focus from the Teal 2 to the Black Widow drone model, right? So right now could be good as we fulfill these orders. Again, as we looked, we're looking for that revenue to really start chunking in Q3, Q4. So we'll see how that plays out. Transition Black Widow model has resulted in lower than planned manufacturing levels, impacting production volumes and leading to higher relative overhead costs. Okay, in the moment, that could be rough. Companies focusing on Black Widow drone, which is expected to replace the Teal 2 as the primary product offering. The company is in the process of scaling its production manufacturing facility to increase revenue and improve gross margins, particularly in anticipation of fulfilling the U.S. Army's Short-Range Reconnaissance Program contract. Management is optimistic about the company's future, citing recent actions to strengthen liquidity through additional financings and the potential revenue from the U.S. Army contract. The company is also working on increasing production capacity to meet anticipated demand for future products. So again, hopefully, right now in this moment, as we're starting out on the up and up to get these contracts, we're in a little bit of a rough spot. Of course, the stock could swing, it could be volatile. I just want everyone to understand the risks involved. Just because you see Army contract or they do drones or they're a tech stock doesn't mean it's guaranteed to go up and up. Nothing is guaranteed. I want you to understand that. Okay, loss. Okay, EPS. Why does it say EPS? Is this EPS or revenue? 80 mil to 120 mil. Again, even if we take the low end 80 million with the equity, it's about 100-something million change. Again, I just want you to keep that in mind, because if it does happen to break the support and slip to like the 5s or the 4s, I just don't want you to be like, what's going on? This is BS. Yeah. Insider selling shares. Another insider selling shares. Another insider selling shares. 5.7 million. Sold 500,000 shares. Has control over a total of 13 million shares. Yeah. Yeah. I mean, he sold a chunk near the top. Still has 13 million shares, though, so. Yeah, so what was that? Like 3% or something? 3.5%? Huh. CTO, 287,000 shares sold. Holding 685,000. That's a pretty big chunk of your position. That's about 25% of your position. And what did this person sell? Sold 220,000 shares. Has control over 400. Wow, these people just liquidated. Sold 80,000. Has control over 380. That's a little bit of a smaller chunk. This is interesting. I mean, that's a chunk. That's almost a third. Sold 100,000 shares. Still has almost 1 million. Okay, that's not bad. 50,000 has 600. This is going back to the previous quarter in December. Was anything else said here? Company expects calendar year 2025 sales of 80 to 120 million. So again, unfortunately, you're in wait and see mode here. Unfortunately, right now you're in wait and see mode. Because again, I think even next quarter they were looking for what, like 6-7 million and change, and then it was going to jump up to like 29 and then 41 million. So that's going to be the make or break. That's going to be the make or break. Again, if it wants to get near the $1 billion valuation, that would be roughly 30% higher from here. No, excuse me, that would be yeah, about 300 million higher from here. About a 3.5 point move, right? So that's what I mean. You could potentially get up to about this 1042 fib level. It really should stop there. Yeah, I don't know. So again, something like this, I'd be in wait and see mode. Something like this, I would be in wait and see mode. I'd watch that support trend line. Again, even if it is on the up and up, you might be able to get shares for the 5s, for the 4s. So watch that level. And you can see again, last time it broke up and out, 15, they tanked it all the way back down to about 4.5. So that's what I mean. This is why we're like right around here looks like, in my opinion, fair value. Which is why I'm saying you might see a break and a gap fill, and then they bounce it and try to bring it back up to support. So try to pick your spots on something like RCAT. I just want to make sure RedCat closes acquisition of FlightWave Aerospace Systems, which it seems like it was a good idea at the time. This was back September 24. Closing of acquisition FlightWave, provider VTOL drone, officially brings the Edge 130, FlightWave's Blue UAS approved military-grade tricopter, into RedCat's family of low-cost, portable, unmanned reconnaissance and precision lethal strike systems. So combining the IPs and absorbing this company potentially led to that Army contract. Again, this is the first time I'm looking at the stock. I'm not, pinpoint accurate with their timeline here, so you guys can update everyone in the comments if I make any mistakes here with the timeline. Quote, today marks a transformative milestone for RedCat and our goal to provide warfighters with a diverse set of rucksack portable drones required for mission effectiveness on today's evolving battlefield. The acquisition of FlightWave broadens our range of drone products and opens up an entirely new revenue stream. The FlightWave Edge 130 Blue completes our family of systems, and we will begin ramping manufacturing this quarter. Mission is to redefine the role. Okay. Teal 2, we're adding Fang drones with precision strike payload capabilities. Right, but see, what I think about also is, I mean, again, it's a good story. They might get a contract, right? It'll give us a couple of hundred drones, we're going to try them out. But also at the same time, if they are that effective, right, and that technologically advanced, are you going to see an order for 10,000, Oh, I need 200,000 drones. Are we really going to see that scale? So that's what I'm curious to see also. But again, when it comes to our military, it's completely up in the air. No one knows what they're doing. Yeah, military grade. Weighing in at only 1,200 grams. The Edge 130 has been flown for up to 2 hours in certain configurations in forward flight mode and industry-leading endurance among all other Blue UAS-approved drones available. Right, so sounds great, and again, could have led to that Army contract. Appoints president of FlightWave. Okay, quick little update. I'm just, again, checking. Right, we sold some shares. We looked at that. Sold some shares right before the year end also, so might have been for tax purposes. This was back in March. Northland Securities initiates coverage on RedCat with outperform $13 price target. March 11th. So that was here. That was here. Stock was sub 5. They said 13. Well, hasn't quite gotten there, but it is on the up and up. Average rating of buy, mean price $15. Again, that would bring it to, what, like 1.3 billion market cap or something like that? No, wait. Yeah, about 1.4, 1.5 maybe. And again, we spoke about this, right? These up and coming stocks, if we want to value them at the high 100 million, low billion mark, it's realistic, right? It's kind of realistic. So that's why, again, in my opinion, again, I'm looking at it as someone who just found it, and hypothetically, if I would like to enter, that's what I'd be looking for, right? Ideally. But again, if they do bounce it and bring it up to 10-ish, about billion two market cap, I can't exactly get too upset either. Because we're hearing about the turmoil and issues and tensions growing overseas, and this is, military reconnaissance, drone, payload delivery frickin' company, right? So we know any moment, drop of the hat, we can get another order. We can potentially get acquired, right? So again, not bad. We have seen worse on this channel. I would try to pick my spots. Those of you who are in it, I get it. And again, if it does happen to break and you still like it and you have cash on hand, you can just add to the position, lower the cost, right? And tuck it away for the long term. But of course, that's your call. That's up to you. But that's pretty much all I have to say about RCAT, and I'll end it there. So once again, Stocks by the Numbers, thanks for stopping by. If you have any questions, comments, or concerns, drop it in the comments section. I'm usually pretty quick to reply. Thumbs up, right? That helps out the algorithm. Leave a comment, share the video, all that stuff. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me, help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, volatile, and uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.